Here we go, baby. It's a massive week coming up, and I hope you're excited like I am. And, hey, we're talking about earnings here for the week starting July 31st, 2023. No exciting intro. I know you're pretty upset with me, probably. You probably want to turn the video off right now. I bet you do because I didn't leave you an exciting intro. Who needs exciting intros when I've got great news for you? It's going to be a fantastic week. We're talking about the monthly recap for the portfolio, the video talking about the monthly dividends earned. We got a great week here. We don't need a good intro today. Let's just be honest. Anyways, let's get cracking into this so it doesn't take 8 years because there's a lot of great companies reporting here this week. And I hope you're excited. We're starting off with none other on Monday than SoFi. You know SoFi. Somehow able to offer ridiculous rates on their accounts. I don't know what they're doing. SoFi, interesting company. One of those that I thought just due to with how these interest rates are rising and actually still continue to be definitely hurting the company, no doubt, but they're still doing great things. I'm shocked. Um, Not much to say about them because I don't follow them too much, and I'm not too into many of the financials. Definitely some of them, but they're not one that I follow too much. But hey, they're doing good things clearly. Apellis after them on semiconductor. You know them. You know what they're making. You know what they're making. Semiconductors. That's what I'm talking about. Chip manufacturing, baby. Um, Immunogen following them to wrap up the before open, which you're probably going to see this after the before open. So I'm glad there's not many companies there. I'm actually trying to take a look at, so you don't get to judge me just yet. Okay, okay. I'm recording this Sunday night. Let's be real with each other. So then we've got to start the aftermarket session here on Monday is Transocean. Never can you judge anyone in 2023. Even a waterway can be whatever it would like to be. If you decide you wanted to be a waterway, frankly, well, I'll tell you your mother was last night. That's all I could tell you. Anyways, we're getting into Western Digital after them. A lot of these chip manufacturers reporting here this week, and that's going to be the main play here, right? We got a lot of tech reporting, kind of heavy here, tech heavy, as usually this second and third week of earnings season does. So hey, Western Digital is definitely one I'm going to be taking a peek at, and I'm excited to see what they're able to post. I'm more excited about a couple of the ones later here this week, but we'll be looking out still. Arista, Zoom Info. Never heard of this company, just being honest with you. Just put a Z in a red box and called it a day. Never heard of this company and never plan to. Tenet Health, Vornado, really a nice attempt at a cool name, but it ended up being lamer than you could ever imagine. Um, Almost like lattice here. I mean, name yourself after an apple lattice pie. Pretty delicious, but not a great name for a company. Just a fact. Avis Budget, and then Welltower. I know Welltower actually. You already know them. Used to have them in the portfolio. Um, Never too excited about REIT earnings, though. There's nothing too exciting about it. But we got a couple here this week that we'll be talking about. Thursday before open, a piece of garbage company known as Uber. And why do I say that? Well, it's Uber, okay? You know my opinion on Uber. I've had it for a while. And let me just tell you, you've seen the performance of the stock since I've told you I don't like Uber. And I'll show you here right now what I don't like about Uber. Well, first off, going to be just forget what I did there. First off, you're going to see a terrible report in terms of profitability, as you always do. A company that just does not record profit still in this day and age. It's kind of wild. But anyways, all I need to do is pull up really the past 5 years, and you see why I don't like it. 15% up in 5 years. Boring, boring. Good performance in the last year. I'll give them credit on that one. But let's talk about the span right before that, right? Let's talk about 2021 and the fall from grace. I mean, this thing went down to freaking $20 a share. I don't like this one because let's just be real with each other. Don't report profitability, and very much an inflated market cap to what they do. And overall, I just I just think it's a business model that's pretty easily copied. Okay, that's maybe rude of me, but just don't like Uber. I don't like the stock. Don't like the way it's trading. Not one that I like to be part of. Obviously, in a big uptrend, definitely think there's a decent chance this is an earnings that could destroy them if they don't do anything from a profitability standpoint. Um, I don't know. I don't know. We'll take a look here. That's what I got to talk about Uber. You don't get me started on Uber, okay? Sirius XM, sorry. Talk about a really boring company, right? One that just really generates money off of subscriptions. I've talked about that many a time. Um, Not a huge fan of something like Sirius XM. I've never used it personally, so I can't speak to it. That's one part, though. I will say that. I feel like there are competitors that just do a little bit of a better job, but there's more talk shows on Sirius XM, right? So that's a benefit that they might have. My finger smells unnaturally bad. I don't know why, but I just smelled my finger, and it smells actually absolutely like I just put it into rotting waste. And I don't know if I can explain why that happened. Pfizer, still going to show some declines in terms of revenue just due to the fact that these big companies aren't paying them. The government's not paying them to shill out the COVID vaccine / 19 booster shots. It is definitely still hurting them. They are facing the headwinds. There's just no doubt about it, right? Just no doubt about it. Yeah, that's what I got for that one. NCL following them. JetBlue, you know JetBlue. I hope you do. We've seen good reports from some of these, well, most of these airplane. What am I trying to think of? What am I trying to call these companies? Air travel? What are these called? I can't even think of the name all of a sudden. I've absolutely lost my gosh darn mind. Anyways, we've seen good numbers. Boeing put up obviously really good numbers. We saw um, Delta did not put up the best number. No, Delta did put up, no, Delta put up good numbers. Southwest didn't put up good numbers. That's what I'm thinking of. Southwest put up okay numbers, but just nothing too crazy. Anyways, we get back into the biopharma with Merck. Nothing crazy to say about Merck. I don't have much to talk about these biopharma companies just because they make their money off of the drugs they sell. And people are going to continue to buy them, right? The doctors are going to continue to prescribe them for them. So that's just how it goes. Marathon, oil, baby. We love talking about it. We've got CAT and then another oil company in BP. I don't know. Dawn is still freaking they're dissing these guys, right? They're still running the same Dawn dish soap commercial because of the BP oil spill. They still are doing it, the same commercial. They're still dishing? Oh, they got me on that one. They caught me. They're dishing out the insults on BP, and honestly, you know what? BP should be just upset with Procter and Gamble for still letting them do it. Marriott, going to see good results with Marriott. Just to be fully honest with you, people are definitely doing great numbers, and the bookings are going to be looking good. People are still spending more money than they own, and that goes to the vacations as well. It just really does. SunPower following them, followed by Altria. More drugs. That's Altria. Anyways, after close, we're getting into Tuesday. Starting with AMD. I mean, what more can you say about AMD? Another one of these lovely chip manufacturers. You're going to see earnings in which you see a pretty decent decline in terms of revenue. I mean, we already saw it with NVIDIA, and it's just a normalcy, right? Really, really strong year last year, and we still are facing headwinds in these companies, not only in terms of ability to manufacture, but I mean, really a lot going on there in terms of the pricing, too. What in the world just happened there? I just dropped everything in the world. Anyways, what you're going to see here, and this is definitely important, you folks need to understand this, you're going to see a report that it's not going to look fantastic, right? It just isn't, and the stock has been on a very big upswing. The question is, will it be able to continue such an upswing after such a or really not as fantastic earnings, right? We'd have to see. I don't know if we're going to see, but we'll see what the stock's going to do. This is one I'm really intrigued with, just because the price action. I mean, we're talking about a 90% movement on the year, and an earnings report that's not going to be lovely. I don't know. I don't know how it looks for them. I just got to be honest. Pinterest following them. It's all about ads for Pinterest. It really is. And I think they put up decent numbers. I really do. Because we've seen from some of these other companies that are making ad-based money, Google being one, ad rates are definitely coming back, right? We're still getting a little bit of growth there, a little bit of recovery, and it's looking okay. So that's what I got for Pinterest. We follow them with freaking Virgin Galactic. You already know my opinion of this company. Not a real company, actually. Doesn't exist for quite a while, and it won't for quite a while. But hey, in theory, you can invest in theory if you'd like. Let's move on from them, go right into Starbucks, one of my focus stocks, because I didn't want to make all tech be my focus stocks. Okay, I wanted to be good. So let's start with Starbucks. One that's really had a disappointing year. I mean, you look year to date. I mean, no movement here. What the freak is that? Just didn't even work at all. Let me refresh. Think maybe it'll work. Google just going nutty right now. No, it's not going to work. Anyways, the thing's up about 0.5%. That's what I was going to say. 50 basis points on a year-to-date basis. Just kidding. 0.42 on a year-to-date basis is up pretty big on a one-year stack. But that's because you look on a 5-year, and there was this big just canyon here. It really hasn't recovered from where it was towards the end of 2021. It's still down from that. And frankly, I think it's on its way back up. I'm just being honest here. Definitely trading at a relatively high multiple that was impacted here last year by a lot of headwinds, including their business in China. And that's going to be one of the stories is China sales and China recovery. It really is going to be a big number or big story to look at. Now, from an EPS standpoint, this really impacts the multiple, so that's what I'm looking at quite a bit here. 86 cents expected versus a year ago of 84. You know what? I don't know what to believe for this company. In my opinion, I would say it's going to be a beat. Um, and I think that impacts the stock quite a bit. I think this is a line that's really important. But even more important, I think, is definitely the sales line. 3.4% growth expected. 8.4 billion is what they're expecting. I think this one is a beat. And again, I think a lot of this narrative is going to be driven around the China sales growth and how that's able to do. Not a great year for them in terms of overall expected growth of 1.3% in the full year. Trading at a multiple of 32 is pretty cheap when you look on a PE basis. But that's where we need to see what this EPS can do, and I think this is entirely a quarter driven by guidance, but we will take a look. We've got Caesars International. We'll hear a lot about them in terms of their sports book. Betting, no doubt, is still growing here. Not a great exciting quarter for them in terms of betting, though. You need to think about that as far as what's even going on at the time. You get a lot of just mid-season baseball, kind of boring during this quarter. You can bet on some fights, obviously, but not a lot. Look, I look forward to really a mega time in terms of fall for these types of companies because you got basketball coming back around, hockey, obviously football, the number one. That's what it's all about, baby. We live for it. But anyways, not too excited this quarter for them. I'll be paying attention, obviously. But yeah, that's what I got for you there. MicroStrategy to follow them. EA, they're not in the game, believe it or not. I don't know. This company just makes a ton of money with microtransactions. They're still doing incredible. That's all I can tell you with them. They just continue to do gangbusters because idiots can't control themselves. Gotta diddle their little wee-wees while opening up a pack in Madden makes them feel good about themselves. Lumen Technologies following them. Then we get AIG, Allstate. No, that wasn't good enough. Allstate. No, what was it? Hey, Allstate. Yeah, that's the guy. That's the guy who does it. Um, Devon Energy following them. I don't know. We'll see. We'll see what BP does. Mosaic. Then we get Prudential. We can scroll down here, believe it or not. A little more, actually. That's right. I scrolled down. You saw me scroll down. Solar Edge and then Match Group. Who the heck is using Match Group? I don't know. But I know some people probably are. People use dating apps still. I mean, not everyone's married like I almost am. I'm a lucky boy, okay? What can I say? Um, Ooh, that was a good neck crack. CVS Health following them. Very boring, But it's a good rock to the portfolio, baby. CVS is going to do consistent numbers. It's just what they do regardless of economic times. CVS is going to be consistent in what they do. Nothing really benefits them. Nothing hurts them. Just being honest. DuPont, we know Dow, DuPont, uh, because Jeff Gordon drove the car back in the day. I don't know, actually. I don't know NASCAR at all. I lied to you. I freaking lied to you. I don't know him at all. CGen following them, followed by Humana. A lot of these health companies here, no doubt. Vertiv, I don't know. Teva, Kraft Heinz. I think the big thing that's going to be hurting them this quarter, no longer having Heinz Field to their name. What a shame. What are the Pittsburgh Steelers doing? Really, what's Kraft Heinz doing, not renewing that license? You gotta just at some point they're grandfathered in. It should always be Heinz Field until it's destroyed. Just being honest with you, that's just what it should be. But anyways, enough about football. I got myself on the football train, and I shouldn't. Boring company in terms of earnings. They just always have a boring. I mean, it's their products are stuff that you'll get regardless of the time of the year, regardless of what's going on in the economy. You get these products because, well, I don't know. They're just good products. Chemico, and then Generac. Kind of boring with Generac too, but hey, we got to talk about them. After close Wednesday, we've got the Shopify. I did put them as one of my focus stocks. Okay, why? Because well, one, I don't know what to do with this one. I can't lie to you here. Definitely one that I've considered selling a little bit. I'm up pretty big here because when you look on a year-to-date basis, the stock's up 85%. Really, a ton of that has come just in the last couple months since May, up 42% alone. I mean, that's pretty big on a 1-year basis, looking good, and on a 5-year basis, looking good too. Now the question is it possible to really do anything anywhere near where it was after really the boom of 2020 with a lot of these tech companies that were focused on e-commerce? Are they going to be able to recover to a level somewhere like that? Somewhere for this one, let's be real here, was a ridiculous level, somewhere over 170 on a per share basis. Is it possible? I don't know. That's what I'm interested in seeing here. Let's see what the earnings actually are expected. Let's see what we can do. 6 cents. And this is what's big here, right? Okay, this is a company that really has not historically made any sort of net income. Expected to see an actual GAAP EPS this quarter is pretty massive. And it's what I look to see in these companies that it's what I look for in companies. That's one that really, for this one, I see, going, a couple of years out. It's a company that produces a lot of net income just due to the business model itself. I think they've got a great avenue for really generating income, free cash flow. Just haven't realized it just yet in their current stage of development. And what do I mean by development? And you can see it here from a revenue perspective. This is development. 25% sales growth expected. That's a $1.6 billion line. Again, not a massive line, all things considered. We're talking about $1 billion only, but hey, I'll take $1 billion. But obviously anyone would. But that's what's crazy on a full year basis. Expected 20% growth. So while they're in this growth phase, to see that EPS continue to increase and really improve and potentially lead to profitability is pretty nice. If I see a profitable quarter, look, this stock could do really good things if they beat on both lines here. But again, really the forecast is going to be on growth. That's what people are going to care about. They're going to care about what the next quarter looks like, and that's just church, yo. That's just the truth. They're going to be talking about what in the world is this this next quarter going to look like, and that's what's going to drive the stock price. I'm kind of bullish here. I can't lie to you, but we'll have to wait and see what happens. Robinhood reporting after them. I don't know. I don't know if I can say even much about Robinhood. I don't know what to tell you. Definitely, I used to use Robinhood. Happily no longer using Robinhood, I'll tell you that. I haven't used a platform in forever, but look, it's not a platform that's here for the investor. I just got to be honest here with you. I don't like some of the things they're running behind the business, behind the show. It's I don't know, and I just don't like them too much. It's the Wild West out there at Robinhood, I guess is a good way to put it. Then we've got Etsy. Etsy's kind of a fun one too, right? It's a stock that's actually pretty volatile, all things considered. When you talk about a pretty boring company, when you get to the grand scheme of things, right? Somewhere where people do handmade products, and it's just kind of boring, but um, seems old fashioned in terms of tech, but it's not actually, all things considered. We've got Oxy, DoorDash following them. A bit of a newer company, all things considered, when we're talking about public trading. I don't use it. Look, and I'll just be honest. And you've heard me say this before. There's a reason why some people don't have any money, and it's probably because they buy things and utilize DoorDash too much. I'm just being honest with you. Um, I don't personally like an upcharge on my food. If I'm getting a thing of McDonald's, so I'm going to get a quarter pounder with cheese that costs $8. I don't want to pay $20 for it just to get delivered, and then also have to pay a tip. I just really don't. I can't fathom that. And look, people just will spend money regardless of whether they have it or not only due to laziness, but just because they don't understand how to take care of money. DoorDash is obviously due to laziness. I've never used it once, and I don't know if I ever will. I always am going to pick up my food. Even if it's pizza, I won't have it delivered. I'll pick it up myself. If you can save that extra buck, I don't know why you wouldn't, folks, right? There's those of us who want to be successful and actually retire, and those of us who don't want to get off the couch and can't even drive 5 minutes to the pizza place to pick up a pizza. Anyways, Zillow following them. Lucky for them, they got just the Z for the actual ticker symbol. Pretty lucky for them. Makes me have nightmares of the housing market right now, is what looking at Zillow does here. So I want to skip right on past it because F that. Qualcomm, another chip manufacturer, really heavily tied in with Apple, so that's what's going to be pretty exciting here because we have Apple coming up later. So I'll be following Qualcomm, obviously, because a lot of what shows for their demand could impact and give a kind of a sneak peek on Apple's earnings in terms of iPhone production potentially too. Good year, could use a set of tires, no doubt. Very boring company though. That's just a fact. Unity, kind of cool. They got the U as well, by the way. Sunrun, we've got Aurora following them. Marathon Oil Corporation, as you know. Here we go. We're getting into this. Look, I had to go down so far for this. It's getting wild here. Spirit. We've got Kinross, Simon Property Groups. Very exciting. Another REIT here reporting, but I kind of like them. Haven't really purchased anything into them, and it's a company that has consistently traded at a high multiple. Simon Property Groups for a REIT trades at a high multiple because people buy in for this one. A consistent dividend dedicated to paying it out. People buy into Simon Property Groups and their high quality properties. They really do. One I will consider on a pullback for sure. McKesson. Then we've got Public Storage. Pretty boring there. I don't know. MGM Resorts International. Again, similar to Marriott. I really do expect good numbers for this type of company. They've got a little bit extra. On top of them, you've got BetMGM too, so a little bit of that incorporation too from a gambling perspective. Not going to be massive for this quarter necessarily, but hey. Then we've got Lemonade. Seemingly pink lemonade, looks delicious. Another one of those tech companies, newer up and comings that interesting to look at here for really how they trade in terms of a multiple perspective. So Thursday before open, Warner Brothers Discovery, really boring old school company in my eyes. Yeah, I don't know. Warner Brothers Discovery is just kind of boring. Obviously, they'll talk about streaming. It's going to be the main thing of their business. HBO Max, now known as Max because Discovery Plus was purchased. Who the heck's going to buy Discovery Plus? Nobody. Um, anyways, I don't know. Not a company that really deserves a big multiple, and especially with the writer strike going on and the actor strike now, they're going to be struggling. I'm falling asleep as we speak. I don't know if you could tell. Moderna following them. Moderna. Going to be hurt again. Similar to Pfizer. Let's just be real here. Going to be similar, similar things going on here. Wayfair, they do have just what I need, but I actually don't know if they do because I've never ordered anything on Wayfair. Interesting though, from a tech, one of these .com companies. I don't know what to say about Wayfair. I actually don't follow them enough. Sorry. ConocoPhillips, really boring, man. We got these we got these oil and gases. We got it all, baby. It's a great week. Expedia Group, never used Expedia either. The logo, I don't know why they changed that E, but it looks kind of stupid. That E's looking stupid. Um, Look, Sabre. Now, not only did they buy Dunder Mifflin, but they're now publicly trading, which is pretty exciting. Um, Now you think about it, do you want to really invest in a company that's just purchased a paper company? They produce, I mean, they sell paper. It's kind of boring, but Sabre must know what they're doing. Like the CEO, I think she's got a good head of shoulders on her hand, and a couple good dogs too. Good head of shoulders on her hands. What does that mean? Good head on her shoulders, no doubt about it. Miss Bennett, she's pretty good. She's pretty good. So Sabre always one I look at. Um, some call it Sabre, actually. So West Rock reporting after them. Then we've got Cigna, boring. BD Repligen, Southern Company, Kellogg's, another boring one here too, with Kellogg's, no doubt. Now, Thursday after close, we have a couple really big bangers here. And starting off with Apple, you know I had to give Apple a focus here because it's freaking Apple. Up to 195 already. Market cap once again over the $3 trillion mark. Year to date up 56%, a massive performance. The last year, not really as great of a story, up only 21% when you include really a downward swing they had towards the end of the year last year. But again, we get into a 5-year stack up 276%. It's been an honor to have this company for a while in the portfolio. And look, it's been on a pretty massive uptrend, which I know what they say is what comes up must come down eventually. And I think this could be a catalyst of an earnings that could potentially lead to a little bit of a downswing. I don't think it's a massive downswing, but it could be a downswing. There's no doubt about it. And it's possible whenever you see a company just rise up 56% in the span of 6 months, 7 months, it's definitely a possibility. Now, from an earnings perspective, Yahoo's got this one wrong. I'll just be honest. From an EPS line, actually expected correct here, but $1.08 versus $1.20 a year ago, a little bit of a decline. Obviously, that's bad. You don't like to see that, but they are going to be balancing that out when you look into next year. There's a lot of headwinds still hitting them, and a lot of research and developments going on right now that's going to be hurting this EPS line. And I don't like necessarily all of the research and development there. Now, the revenue, that's something they have wrong. Actually expected. I'm pretty sure the expectations are like an $82 billion line from a consensus perspective. And Yahoo's got them at a 74, but it's really not quite like that. They're only expected to decline revenue by about 2%, not 10% like Yahoo Finance wants to say. So I'm not looking at this line accurately at all. Just doesn't, you know. Did you like that noise? Anyways, just not going to be accurate in my eyes. Not too excited, so we'll see. I'd love to look at these earnings and see what's going on. Followed by another freaking low baby, another focus stock in Amazon. Amazon, their focus stock. Well, hey, look, stock's up 54% year to date. Has had a pretty rough time though. On a 1-year basis, over the last 12 months, this stock's down 2%. I don't know. What more can you say? It's down 2%. That's painful to see on a company like Amazon, to see that. And why is it down like that? Well, you've seen some actually terrible numbers from an EPS line from them. Last year was pretty horrific. Now this year they're expected to recover back to their old ways, actually making profit. 32 cents expected versus -20 of a year ago. That's obviously going to bolster that P ratio quite significantly when they're able to do that and really lower that multiple quite a bit. On a full year basis, expected $1.44. It's good to see that. That's definitely going to help them from a multiple standpoint. Now, on a revenue standpoint, actually only expected a little decline here of a 119 billion, which is against a 121 billion of a year prior. Expected about a $2 billion decline when we're looking year over year here. Now, again, not shocking if this is the case, but I really do think they beat on this line. from a revenue standpoint. And I say it just because people are buying everything they can, everything under the sun. People are buying. It's kind of wicked, folks. It really is. So I'm definitely poised, excited to see what they're able to do here. Um, yeah, I don't know. I'm very, very excited. Obviously, a massive, massive company. Trading at a high multiple. We'll see what happens here with them. Airbnb, another boring one, and so is Carvana. Why do I say boring? Because they're really not boring. The stocks are actually incredibly fun when it comes to an earnings perspective because they trade just ridiculously. They really do. Now, Carvana, don't like them at all. Not a company that I'm a big fan of at all. The car vending machine. Um, really just one of those rip-off type companies. I just don't like them on a long-term basis. I just don't like the business model. Just being honest with you. I just don't. And Airbnb, I'm not a big fan of Airbnb either. Anytime that you can just stay at someone's house, and again, I think there's some not as good stuff going on. Well, first off, I will say Airbnb just loses money hand over fist. Um, but for the company itself, I just don't like the business model itself either because it's just something that I just don't want to stay at someone's house. I don't know. It feels creepy to me. Wow, would I rather stay at a hotel, maybe a resort? I mean, yes. Staying at someone's house. The worst part is there's opportunities to stay at someone's house while the person's still at the house. That's just weird. I don't want to live with a stranger. I don't want to live in the same house as a stranger for a week. It's just not the vacation I dream of. There is going to be some, for some people, I'm sure it's pretty exciting. Some of those really like more expensive type ones that you can actually go and like live in a castle, something like that. Those are pretty cool for experiences, but just living in someone's house, brother, just go and stay in a hotel or something. I don't know. Coinbase, uh, we'll follow them. I don't know. I don't talk about crypto much here, and it's just because we've seen an uptrend there in terms of crypto as volatility's kind of ramped up, but I still don't like crypto all that much. I know they talk about universal currency. At some point, I'm sure there will be. But if I'm being honest here, I just don't like crypto right now just because the valuations are we're talking about all speculation backed by nothing. It's just something that's unknown. I don't know. We'll see when regulation comes into play. Maybe then we can start talking. But I know they're getting hammered really with this stuff, and a lot of these brokerages are pulling away from actually trading crypto because of really the ramifications of what they're seeing. And Coinbase is definitely going to get hit there too. Square to follow them. I don't think they go by Square anymore. Anyways, I don't know. Maybe I'm wrong. I thought they switched their name, but maybe I'm the crazy one. I'm falling asleep. There's no doubt about it. DraftKings, Open Door. I think. Sorry, skip DraftKings there, but you get a kind of a hint ahead of time with Caesars. DraftKings is definitely an interesting one. I'm interested in the stock itself, so I'll keep an eye out. Open Door, Motorola. Don't know how they exist. I'll say it every day of the week. I'm sure they sell a lot of walkie-talkies, that's for sure. But from a phone perspective, come on now, who's buying a Motorola phone? Not happening at all. Weight Watchers, reimagined. Who knew? I don't have a clue. Who the heck's buying Weight Watcher stock? That's all I could. That's all I gotta ask. Dropbox, important for the future, no doubt. I don't like using it though. Just being real with you. Friday before open, we've got Fubo TV coming into a big sports season. Maybe this isn't a great quarter for them or an exciting quarter, but next quarter could be. Right, the ability to stream a lot more in terms of sporting events is going to be massive for people. I won't be partaking in Fubo personally, just because it's kind of expensive actually when you look at it. Really is. Then we get to Fisker, PPL, Cinemark. Not too much to say about them. Dominion Energy, Frontier, Curate. I know them. They're actually in the Middle East. And then XPO Logistics. I'm going to freaking bed, folks. I'm just, should have saved this for the morning. But I got a lot to do in the morning. Got to renew the plates. Got to mow the lawn. And first and foremost, I got to have a good night with your mother. Have a great night, folks.